If you're a seller, a wait and hold strategy is no longer a viable business tactic, mainly because each year you hold on to a property that's not producing rental income or not producing a tenant. Loss compounds because nobody wants to buy a property where there's no rental activity at all, do they? Hi there, Om Swastiastu. This is Jing again with the Bali Business Review, and I'm reporting here in California. So recently I've been doing some exciting work coaching startup founders in a mentorship program at the University of California at Berkeley. I've been visiting the campuses of Google with some of my software engineering friends that are working in these gigantic tech companies and getting into the depths of AI research with the minds at Google DeepMind and Gemini. It's been an exciting time to be able to see what might be ahead in the upcoming year, looking at it through the lens of technology and AI being right here at the source of the action in Silicon Valley. So based on just some of my simple observations, what I hope to do is to resolve some of the dilemmas that we spoke about previously last week in the price war that is now emerging in Bali. The price war is a set of conditions that is making it highly competitive at this moment in 2026 as hotels are now adding more of their large inventories of rooms into the marketplace and thus flooding Bali with an abundance of cheap rooms back in traditional hospitality accommodations. This motivated action, this motivated business strategic decision by hotel owners is actually a reaction to global policy, US-China trade war. So let's get into the facts and kind of look a little bit more seriously at what are potential options that investors have at this moment. And when I speak about investors, the key thing I want to emphasize is I'm speaking both to buyers and to sellers, both at the same time. Many, I guess, previously very enthusiastic YouTube channels have quieted down this year due to some of the facts that they promised. Big talk about return on investment and calculations of, let's say, yields based on just ludicrous mathematical fallacies of taking your highest daily rate and then multiplying it against every single night of the year. I think these type of mathematical miscalculations are now probably the source of jokes on Reddit and untold forums where many people who are soured by their investment experience are publicly complaining. But the fact remains that this doesn't help a particular investor that is looking to exit, but it might help a also opportunistic investor who is looking to enter the market. So in today's episode, let's talk about what my perspective is on the 2026 property sale market. So is it a good time to buy a property? Is it a good time to sell a property? And what are some of the frictions that both buyers and sellers are currently facing? So let's begin with the condition of what I've called market failure for the past 2 years. Market failure is not anything new that happens in Indonesia. In fact, during my 20 years of working in real estate, this phenomenon it's unavoidable. I, at this point, don't know how to stop it unless I get on YouTube and talk to an audience to try to educate potential investors more. I'll go over 2 past market failures that have happened in history in Indonesia, explain how it's happening right now, and give, let's say, potential exits and options that will help motivated investors gain, I guess, the best return on their investment based on current circumstances. Let's go. So, market failure. What is it? What causes it? And what is the history of it? Market failure is, simply put, the supply side of a market have objects that nobody really wants to buy. That means there is no buyer with an actual desire to purchase any property in that marketplace at the listed prices. But you might ask yourself, how did the mechanism of such a situation occur in the first place? Well, in Indonesia, unfortunately, there is not a lot of, let's say, respect or adherence to actual valuation of properties at the time that they're listed, or at the time they're sold, or at the time of any particular matter. The actual transaction price is only known by the buyer and seller for most real estate in Indonesia. So we know that because we've interviewed the head of the Bali Public Appraisal Office, and they told us so. So the problem with that is that when no actual recorded prices are kept in any database or any record, then we really don't know what the actual prices that property have been sold are at. So this leads to a untethering effect, and this is the simple mechanism in which it happens. A desperate seller who is unhappy with the performance that they're getting from their already overpriced property because they've purchased a false asset. They purchased a false asset because they bought their property without watching our YouTube channel, watched another YouTube channel that told them wrong investment mathematics. They believed it since it was a casual, fun decision at the time. And now they're looking at the financial reports and realizing, well, none of this actually makes sense. It's not possible to attain peak season rates at 80% occupancy all throughout the year. I've talked about seasonality previously in another episode, and hopefully no future investors will be beguiled by that type of mathematical miscalculation again. So told what we have called in our Halloween episode a zombie seller. A truly motivated seller will now infect the market with their miscalculated prices. No investor wants to be fooled. No investor wants to pick up the check at the end of the party. So what they do is they simply march themselves to a real estate agent. They tell the real estate agent to sell the property at not just what they purchased for, but also an additional margin based on their, let's say, lost time and suffering for having had to buy such an overpriced, non-valuable asset. Now, the real estate agent is now in a critical position where they can show some spine and some integrity by refusing to list the property at the wrong price because as a real estate agent, you should probably know what the right price are, or being tempted by greed and also the fear of loss of losing this available listing to the neighboring real estate agent just down the road, they most likely will cave in. They'll agree to list the property at whatever price that this seller will want to sell at, thus locking in a cycle of despair, locking the cycle in which the marketplace is now polluted with more and more sellers arriving. That is the potential loss that any particular seller is now facing in their dire situation to sell a property, which means that when you go to any real estate office, you should probably assume that most of the prices listed are actually falsely calculated. So what is going to be the exit for this sticky market failure situation in which properties on leasehold are finding it more and more difficult to find a second owner, or even a first owner for that matter? So it comes down to probably a change in the investment attitude towards property. For many years, people who bought property in Bali were thinking about, in the very early days, buying a show horse. This type of property investor is not really concerned at all whether the property makes any money or does any type of financial performance. This was many hotel owners before the recent price war happening. So this type of owner simply buys a property for its aesthetic value. They probably look at it in Architectural Digest, they watch the local project, they think that buying a property is a lifestyle consideration, and they do so. And as long as, let's say, there's no financial woes for this type of investor, they'll be happy to purchase property as art. This was the marketplace when I first came to Bali, and all property was luxurious and sold in this manner. Sometime around, let's say, the 2010s, there became a shift, and the shift happened when the leasehold model emerged, in which I previously explained in my last video, and there became an evolution of this type of investor. So the investor was no longer, let's say, a show horse type investor. It was more like a racehorse type investor. So a racehorse wins purses and thus gets their owner's value from being able to rank and beat other racehorses. So this type of investment philosophy happened for quite a while, and it was good. It was good because basically what was happening was that investors were more open to gaining financial investment return. Many developers and property agents thus added a lot of, let's say, marketing around the return on investment, the magic buzzword of ROI, to marketing materials and to their pitches. And that became kind of a core component as more, let's say, middle class investors started coming in to buy sensible properties with financial performance. The third type of investor is a type of investor that I predict will become more abundant in 2026. These are investors who are simply buying workhorse properties, and it's probably the most fit considering some of the commodity properties we have seen. These cookie cutter white Mediterranean properties will probably fall into that category that are issuing 15, 20, 30 at a time. The workhorse investor is probably looking for nothing more than actually a really low entry point. They're probably going to find a way to calculate the true value of a property based on thorough analysis. Anybody using some basic AI tools can probably now calculate what the rental yield and also the likely performance of a investment property would be. Thus, they would be able to now offer correct valuations, perhaps at 50%, perhaps even more discount to listed property owners. Now, it's up to each property owner to decide what they were going to do with such bids, but I'd imagine as more property owners who are sitting on, let's say, diminishing and deflating leasehold agreements, in which each year of little to no financial activity is a year of loss based on their lease, then this will motivate a good portion, I think, of the sellers to actually consider taking a logical financial offer for the property, exit the market, and restore some sort of liquidity back into the real estate property market. So this is not good if you have purchased a property recently. If you're adventurous and you're feeling, let's say, the excitement to bargain and to set out fair deals, I'd imagine that there's quite a number of sellers that will happily take maybe 50 to 60 to even 70% less than what you're seeing their properties are worth. And so at this point in the marketplace, this is probably the correction that is necessary in order to allow for a new type of investor with the right mindset to compete in a very, very competitive pricing market. It's going to probably be a realm of business left to the most serious entrepreneurs and the most serious organizations in hospitality looking to compete in the next few years, until hopefully more visitors will find value coming in Bali and increase the overall visitor pool again. All right, so this is Jing again for the Bali Business Review, and hopefully this bit of sobering news can alleviate a market correction that can help everyone find peace, harmony, and also a way, let's say, into new opportunities ahead for 2026.